Let's also get more from the Ifo Institute President Clemens Fuest on the figures that came out just minutes ago. December Ifo business confidence, 86.4. That's a touch below estimates. Mr. Fuest, as always, thank you for joining us. How much do you worry about the German economy in 2024?
Yes, the situation is clearly weak. The economy is weak, and we've been waiting for a recovery now for some time, and it's not coming. So this is worrying. What's contributed to that is certainly the uncertainty surrounding the constitutional court ruling in Germany and the impact on the public budget. But there are other unresolved issues like high energy prices, frictions in international trade. So this is holding the German economy back.
But do you believe the economy is actually slipping back? And so is the rebound that we were expecting at this time, is that further delayed?
It looks like it's further delayed. In our forecast, we expected a flat end of the year, so zero growth in the last quarter, and this may now tip us into another technical recession. Q3 was negative, and Q4 may now also be negative. So the recovery, if it comes, is certainly further delayed.
So do you think a recession in the second half is now confirmed?
Yeah, it's not confirmed, but it's becoming increasingly likely because we are just, we expected a zero, and now with this incoming data, it may very well be that we have a negative reading. Of course, this is all very close to zero. The bigger issue is that the German economy is stagnating more or less, slightly above or below zero, but we are waiting for this recovery, which is not coming, and that is certainly a matter of concern.
But Mr. Fuest, you mentioned, of course, the German government finally agreeing on this budget after negotiations that at times we understand were pretty tense. The measures include subsidy cuts, but also they include a higher carbon price. So what's the impact of those measures actually on inflation and growth going forward?
So our expectation is that the impact on growth will be very limited, maybe 0.1 or 0.2 percentage points lower. That's not the big issue. The issue is maybe more the fact that there is a lot of uncertainty about economic policy going forward. And even now, the government has found a compromise on the cuts, but this compromise is now called into question again. So this uncertainty is just not going away. At the same time, what we would need is a convincing strategy, economic policy strategy, to get back to growth, a strategy for a recovery, and this strategy is missing completely. And I guess that is part of the story that explains why the German economy is not recovering. Of course, there are other factors. The global economy, global trade is relatively weak, so that doesn't help either.
How much of the German rebound is actually at the mercy of what happens in the U.S. and what happens in China?
The US and China are the most important export markets for the German economy. So what happens there is very important for Germany. At the same time, Germany faces some structural issues. So it's maybe less clear than in the past that an upswing in global trade will also benefit the German economy as it did before. So we have a combination of concerns about the global economy, maybe lacking dynamism coming from the outside, and domestic structural issues. If we think about the car industry, all the issues with e-mobility, autonomous driving, IoT problems. So it's this mixture of structural problems and weak demand from the outside.
But how much do you think the impact, I guess, of higher interest rates in Germany have already worked their way through the economy?
So higher interest rates have certainly had a strong impact on the construction sector. So that's another reason why the economy is stagnating, especially in construction. We have a very weak development. The Ifo index has now reached its lowest level since 2005 in construction. And that also weighs on the German economy. It's high interest rates, but it's also high construction cost and complex planning procedures. This combination of factors is really toxic for the construction industry.
And Mr. Fuest, this is not going to ease up anytime soon. When do you expect it to normalize a little bit?
Well, there are two factors that may help. First of all, wages are growing relatively quickly and employment is still strong. And then we do expect interest rates to decline maybe in the second half of 2024. And if the economy is weaker, this may even come earlier. So these may be two factors supporting the economy. And these are two factors that may help the economy to grow at least a little bit in the coming year.
Okay, Mr. Fuest, thank you so much for joining us. Clemens Fuest, the president of the Ifo Institute.